What is going on, investors? It is July 20th. This is take two. I just got done recording a video, but it dragged on for so long. I'm like, I can't possibly do that again. So I don't want to put you through this. I'm going to shorten what I was going to say and do it in hopefully half the time. I'm going to review the accounts. I'm going to go through all the positions. I'm going to compare it to the S&P 500. I'm going to do my investing tab, and then I'm going to show you how I use volume as a tool to confirm signals and to help me make better decisions when I enter or exit positions. Boom. I'm going to go to the market first, my account first, excuse me. Now, I had a really nice day. I'm sitting at $93,042. Beating the market, I'm up 1.68%. I think the market was up like 0.6. We'll do a comparison a little bit. First, I'm going to go through all the positions. You can pause the video at any moment to try to find out the exact positions of the account. These are the options first. All the information you may need is in this box over here. This is my equity. Apple had a decent day. Realty income about flat. Main Street Capital down 1/3%. Goldman Sachs up 1%. This one's doing well, maybe about 320 now. So hopefully it stays elevated till Friday. Paramount up over $1,000, 3.5%. Really nice climb towards the end of the day here, midday. Smith & Wesson up 2%, killing it. So let's take a look at the SPY and do a little comparison real quick. So 1.68%, we'll just do the regular hours, and we're going to ignore the after hours. Up 0.64% for the S&P, so really nice gains over the S&P 500. Let's see how the S&P did over the week. 5.5%. Over the month, 5.16. 3 months is down 12%, really bad. 1 year down 7.3. So a lot of negative on a 3 and 1 year. Let's see how I did. So 1 week is up 10% instead of just 5. 1 month is up 16.87 instead of just 5. So great. 3 month is plus 7.2 instead of negative 7 or whatever it was. Or maybe more than that. I think it was like 12 or 13. 1 year I'm up 13, and the market was up over 7%, down over 7%. So I'm beating the market about 20% on the year-over-year basis. If you want to see the all-time chart, fine, I'll show you, but I always have to say that I started investing somewhere around here in August 28, 2018. That's why it looks flat before that. All right, investing tab, just cruising through this so much faster than my previous video. I'm sitting at 32.5% margin, which is basically 65%. For those of you who know how this works already, I'm 65% levered. You just got to double the number. These are my positions. Total return, Apple, Main Street, Realty Income are the top 3 positions in total returns. In equity is Apple, Goldman Sachs, Main Street Capital. So that is the account. Well, that went quick. And now I'm going to talk about volume. So volume is a really interesting tool that, first of all, take everything I say with a big grain of salt because I'm not a technician. But like I mentioned a couple videos ago when I talk about how to make money in the markets, is that it's good to be versatile in all areas of the capital markets, because then it makes you, it helps you make a better judgment, better decision when it comes to whatever you're doing in the markets. So the way I use volume, I was taught this, is that volume kind of confirms a move. So if a move happens in the market and it's a very light volume, then it doesn't really matter. Like, you need actual activity to kind of confirm what's going on. So I'm just going to go through 1 or 2 examples on the advanced chart on Robinhood to try to figure out if we can actually gain some information. We can have, if volume has some kind of predictive power. So I'm going to choose something I didn't do in the previous video. So this is going to be totally random. I have not prepared for this ticker symbol. I'm just going to look at a random, how about 100 most popular, and we'll just pick the top one. Oh, it's Apple. Okay, how about, I own Apple. How about the number 10? 1, 2, 3, 4, 5, 6, 7, 8, 9, Disney. Okay, cool. Disney. I just made a video on Disney last weekend. That's cool. Not planned. This is random. I'm going to go to the advanced tab. I'm going to zoom out a little bit. Excuse me. And then we're going to be able to take a look at the volume of this thing. So how about we squeeze it a little more? All right. This is cool. Okay, now it automatically put me a 5-year chart. So the premise here is that, or the way it works is that usually when volume dries up, okay, so before I look at the chart even, when volume dries up, it usually means that there is a big move coming in. All right, usually bearish sign. Now it's not a for sure bet, it's not a law, but, and obviously this is not financial advice, just lessons that I've learned and things, tools and how we make decisions, is that when volume dries up, usually that means that the buyers are kind of exhausted, the market is exhausted. And so as activity decreases, that's kind of like a bearish sign for the market. It means there's no more interest in the stock. And interest in a stock is usually correlated with bullish behavior, right? Okay. Like if there's a lot of interest in sneakers, price of sneakers are going up. Even though the sellers might increase, the buyers also increase. Sneakers are popular, right? They're popping. So the prices of them usually go up. Take any commodity or any product to complete that analogy. So let's take a look here if we can read into this when it comes to what are we looking at? Disney. So this is live. I haven't done this before, but immediately I see a low volume trench here, which does not confirm, right? It actually predicted a small upward move. So these trading sessions, each trading session I think is like 1 week on this 5-year chart, maybe, I don't know, something like that. Yeah, 1 week. So it actually didn't work, right? I mean, it predicted a big move, but it was not bearish. But you could do this. What you can do is you can just kind of wait it out. If you see a slowdown in volume, you can wait it out, see what happens, and then knowing that there's been a move phase of the stock or underlying that you're trading, you can now kind of place your whether you're selling a put or a call option, you can place your trade knowing that you have elevated volume, and then it's going to stabilize. Implied volume is going to decrease, volatility is going to decrease, your premium is going to decrease. So it's a good time to kind of harvest premium. Adversely, right, you can use it to place, to buy calls and puts if you want to buy when you see really, really, really decreased volume, right? So let's take another example. Obviously, it didn't work here in 2018 August. Let's look for, only looking at the volume here. I see very low volume here in September 2nd. Let's see what happened after that. Sure enough, we had a small drop in the next 3 weeks of trading. So that was a nice precursor. A couple of weeks of low volume followed by 3 weeks of selling. There's another, do you see these two? Really, I know they're tiny, but these 2 weeks in December, really low volume, right? Usually around Christmas, there's low volume. And then the next 1, 2, 3, 4 sessions were bearish. And then another couple decreased volume. This one's pretty slow, but it preceded a huge drop. Actually, the next like 4 or 5 weeks of just tremendous selling, right? And the opposite works too. If you see this high volume, that usually means like, okay, there's been a month of high volume. It's probably going to slow down. In this case, it didn't actually slow down too much, but it was a signal. A high volume was a signal of bullish activity, right? If there's a lot of interest, usually things are going to go up. Another low volume area is these two that I can see, and let's see on the top, nothing really significant happened. I guess these two sessions predicted a small drop. If I look at the price here, small drop in the next one session. So not very informative. Let's go to the year chart and see if we can get more information. So just eyeballing it, I see that there's 4 low volume sessions here, and it kind of predicted a downward move in the next 4. A bit of low volume here, predicted about 3 or 4 sessions. I think those are days, yeah, days of trading. So kind of worked there as well. A little bit of low volume here, not really predicting that much. How about this one here? This one didn't really work as a very very good warning signal. How about right here? There's a couple of really low volume days, 2 or 3, and yeah, it did kind of predict the next tons of sessions were bearish. And over here too, you can see 1, 2, 3, 4 5 maybe low volume sessions, and sure enough, when you string enough of them together, they predicted a pretty big downward move in the markets. So it does, I guess, hold some predictive power. Let's see on the 3-month chart. The only really low volume I see is here, 1, 2, 3, 4 trading sessions, and that one sure enough was predictive. And here too, I guess 1, 2, followed by a down drop. So it's not a for sure thing. On the 1-month chart, I see these two low volume sessions. It doesn't matter, by the way, if they're green or red. And sure enough, after these two, there was a big drop in the next 3 trading periods. These are hours. 1, 2, 3 hours of low volume, followed by a big move, but not to the downside. So over here, 1, 2, 3, followed by a big move, but to the upside. 1, 2, 3, we don't know yet. So, and this stuff works on any time period. Like, periods of low volume usually precede a pretty aggressive move. So you can kind of, you can use it as a flag. So that's exactly the purpose. Okay, this was Disney. Maybe Disney wasn't that good of an example, but it still worked a few times. How about let's go to top 100 and pick the 5th most popular one, just to collect 1, 2, 3, 4, 5. Okay, Amazon. Advanced. Let's go to, let's say, the 1-month chart. Okay, super low volume here, these 2, 3 sessions, followed by a pretty bearish move in the next 5 or 6 or 7. Low volume here, 2 sessions, followed by a big down move. Even though this candle's green, it was a big down move right afterwards. 1, 2, 3 low volumes, followed by 3 big volumes, but then some more low volumes, even lower than before. And then, of course, the next 2 sessions were really bearish. 1, 2, 3, and then a drop. 1, 2, 3, and then a rise up. Okay, 1, 2, 3, and then a rise up. So it doesn't always work, but it kind of does predict a little bit of a move, right? I'm just looking at quick outliers here. Let's see on the 5-year chart. There aren't really any distinctive low volume areas here. Okay, but you can do this experiment on your own. Basically, it's a tool to kind of flag, the market, and perhaps if things are really quiet, like, don't go out there and try to place, your options trades unless you're looking for big volatility. Like, if you're buying options, perhaps it's a good idea when it slows down. But if you're selling, you want to wait for like the big spikes in whatever time period that you're trading in. Like, if you're doing weeklies, then you might want to look at the weekly chart, right? But if you're about to sell or buy options that last for months, then pull out to the 3-month chart or a year chart to get a better idea of how the volume is going. So anyway, I hope that helped you. I use it sometimes, rarely. Like I said, I'm not big on technicals, but it's something that I think has proven to have some kind of predictive power, and I thought it was worth mentioning. This video is much shorter than the previous one. If you thought this one dragged out, then man, you would have hated my previous recording. So I just did it over to keep it a little bit shorter. All right, that's it for now. I'm gonna hopefully make another video tomorrow, and hopefully we get all-time highs maybe in the next week or 2. I haven't been at all-time highs for months. So let's see. All right, that's it for now. Peace out.